Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Okay, folks, let's kick it off with the price of Bitcoin right now sitting at $91,000. So we are waiting for the next breakout to move upwards. But as I've been sharing with you guys, user Marty Party on X shared a Wyckoff accumulation model, and Bitcoin seems to be following that. Now, it's not guaranteed that this plays out, but on the Wyckoff accumulation model, it looks like it's going to break down first and retest lows before moving up. Again, not guaranteed, but just be mentally prepared for it. And we know Wednesday we're going to hear about the tariffs from the Supreme Court. If they're ruled unlawful and things along those lines, it could affect markets. So let's wait and see. Now, this is just the short term. In the midterm, I believe we're going to start rallying as we head towards the end of January. And in the long term, we could possibly see new all-time highs. And one of the things we've been tracking is, of course, gold and silver, but also the stock market, specifically the Russell. The Russell has made new all-time highs. That's really good. We want to see it continue and go into price discovery because that is very great for the entire bull market. We're seeing rotation of liquidity, and also it's a great indication for the altcoin market cap. Here's what the CEO and founder of Because Bitcoin highlighted. He says, let's try this one more time. The Russell 2000 typically leads Ethereum into price discovery. The Russell 2000 now appears to have struck the landing into an all-time high break. Big money, big money. So he aligned the Ethereum chart with the Russell chart. So let's see. Again, these things are not guaranteed, but we're seeing the positive signs, right? We're seeing liquidity start to make its way, and it's hitting these lower cap stocks and much more. And again, gold and silver hitting new all-time highs, the S&P 500, now the Russell, and we're waiting for Bitcoin and the crypto market to catch up. So we got to be patient. Now, adoption of crypto continues. Over the past 2 to 3 months, we've seen some of the most bullish adoption news ever, with major banks and much more getting involved, yet the price action didn't reflect that. But we know eventually it will be priced in. So $400 billion Standard Chartered to launch Crypto Prime Brokerage. So all the major banks and stock exchanges and financial institutions are all launching crypto services. So Standard Chartered is preparing to deepen its push into digital assets by setting up a crypto prime brokerage, according to people familiar with the matter, as major global banks accelerate efforts to compete for institutional crypto flows. Notice it didn't say retail, institutional, big money, right? Wealthy clients putting their money in the asset class. So the London-based lender plans to house the new business within the SC Ventures, its wholly owned venture capital arm, rather than inside its core corporate and investment bank. Discussions remain at an early stage, and the timing of any launch has yet to be determined, the people said, speaking on the condition of anonymity because the plans are not public. Now, we've seen this over and over. We saw it for Charles Schwab. We saw it for Morgan Stanley. Somebody will come on and say, this company plans to launch crypto. And then, maybe 4 or 5 months later, boom, it's live, right? We've heard rumors of Charles Schwab. They're going to launch crypto trading this year. So it could happen in the first half of this year and expect it to be pretty soon, right? So this is your typical PR move, right? They'll leak some information, get the people buttered up for it, and they'll time it with the market and buy the rumor, sell the news, right? So we're going to ride the wave. And the big question is this wave taking us to new highs or just a dead cat bounce relief rally situation, right? Well, we're going to have to wait and see. Now, look at this news. This is really big. Crypto custody company BitGo seeks up to $201 million in US IPO. Now, many of you know I've had Mike Belshie on the podcast many times over the years. I'm hoping to get him back on soon. Mike is, of course, a legend in the Web 1 and Web 2.0 world. And he's, of course, the founder of BitGo, the crypto custodian, which is huge. And we've heard that BitGo has plans to go public this year, and along with Securitize and other companies. So again, there's people saying we are in a bear market, but no one goes public in a bear market. There has to be liquidity, right? It would be dumb to go public in a bear market where liquidity is dried up. So BitGo Holdings, a major cryptocurrency custody company, announced the launch of its initial public offering in a filing with the U.S. Securities and Exchange Commission. In a Form S-1 filed with the SEC, BitGo said the offering will include 11 million shares of Class A common stock issued by the company, along with 821,595 shares offered by existing stockholders. The company announced the launch of the offering on Monday. Based on an expected price range of $15 to $17 per share, the IPO could raise as much as $201 million, with total shares offered amounting to roughly 11.8 million. So, folks, this is very bullish, a sign that we are still in some sort of bull market here, and there's still more to go if these companies are looking to do this. And again, it's not just BitGo. You got Securitize. There's even talks of AI companies going public, right? OpenAI and much more. So these are things to watch. We want to look at the macro, the charts, the on-chain data. We want to look at events like this that are huge milestones and landmark moments, because it tells you, it gives you an indication of what is ahead. Obviously, this is not 100% guaranteed because black swan events and different situations can pop up. But for the most part, I am bullish and I'm optimistic that we're going to see a major rally. Folks, this episode is brought to you by Trezor. Trezor makes beautiful hardware wallets that make it easy for you to self-custody your crypto assets. I'm a big believer in self-custody. I've been preaching about it for years. I personally store the majority of my crypto assets on hardware wallets, and I'm a user of the Trezor Safe 5 and Trezor Safe 7 devices. Now, back in 2013, Trezor, they were the pioneers of the crypto hardware wallets along with the seed phrase setup. They started it all. And folks, their hardware devices are open source. The code is out there for anybody to review. That's how much they trust what they've built. And of course, they support all the major crypto assets: Bitcoin, Solana, XRP, Ethereum, Cardano, Dogecoin, and much more, and even new crypto assets. And they have a software suite called Trezor Suite, which helps you to manage all this on the device with a mobile app or even desktop, and you can buy and sell within that app. And if you need help with setting up your device, they have a hand-holding service where you can talk to a Trezor rep. Don't worry, they don't ask you for your private keys. So that's an option. You know, it can be a bit complicated for some folks, you know, with their first go around and setting up the device. So once again, you can talk to a Trezor rep. And folks, if you use my code Thinking Crypto, all one word, Thinking Crypto, you can get 5% off certain devices and services. So check it out, folks. Once again, I'm a user of the Trezor devices, and I store the majority of my crypto assets on these things. So it's, I think, the safest way to custody your assets. So check it out. Link will be in the description. Okay, folks, we got a lot of news from the SEC, including statements from Chair Paul Atkins. But here we got some updates on their ETF decisions. So SEC delays Pengu and T Rowe crypto ETFs as Grayscale seeks options green light. So often the SEC will delay certain ETFs to get public comments. It's just part of the process, but let me give you the details. So the SEC extended its decision deadline on 2 crypto-related exchange-traded funds while opening a comment window on options tied to a third in 3 separate filing decisions released Monday. In separate Federal Register notices, the SEC designated a longer period to consider proposed rule changes that would allow the listing of Canary Pudgy Penguins ETF on CBOE BZX and T Rowe Price Active Crypto ETF on NYSE ARCA. Both filings fall under the SEC's standard 19B-4 process, which lets it extend the initial decision window by up to 45 days while it evaluates market structure, investor protection, and manipulation concerns. So again, the typical process here. But we have a new crypto ETF filing. So the new S&P Crypto 10 ETF by Cyber Hornets ETF, I've never heard of that company, S1 has been filed with the SEC using the symbol CTX. It tracks a basket of Bitcoin, Ethereum, XRP, Binance Coin, Solana, Tron, Cardano, Bitcoin Cash, Chainlink, and Stellar. So a lot of the coins that are in the top 10 are present here, clearly excluding stablecoins, obviously. So we continue to see the ETF race. Everybody wants to launch crypto ETFs, and we've seen the success so far. It's incredible, the inflows that have been taking place. Now, SEC Chair Paul Atkins, he put out some statements today. He was on Fox Business talking about crypto. Let me share what he tweeted out today. He says, "This is a big week for crypto. Congress is on the cusp of upgrading our financial markets for the 21st century. I am wholly supportive of Congress providing clarity on jurisdictional split between the SEC and CFTC. The most important thing we can do right now for investors is bring crypto asset markets out of the regulatory gray zone Passing bipartisan market structure legislation will help us future-proof against rogue regulators, ensuring that we achieve President Trump's goal to make the U.S. the crypto capital of the world. Now he continues and so on and so forth. He talks about the new CFTC chair, Mike Seelig, and much more. But what's interesting, he was asked by the Fox News host, will the United States seize Venezuela's $60 billion in Bitcoin? So a couple of things here. He couldn't answer that question, obviously, right? He kind of deflected, which I understand. He's like, look, it's not for me to answer. There's other government agencies involved with that. But the fact that that question was asked by the reporter on Fox kind of gives some credence to Venezuela probably has some Bitcoin. Is it indeed 60 billion? I don't know. But, there's reports that going back to the early days, 2017, 2018, they were using Bitcoin to evade sanctions. So they probably do have a stash. We're going to have to wait and see if, the U.S. is able to get it, because if it's in self-custody, it's going to be very hard for them to get it. If they were using a custodian, the Venezuelan government, of course, then it's going to be pretty easy for them to get it. So we're going to have to wait and see. But very interesting that question came up and it was asked to Paul Atkins. Okay, moving ahead, Senator Lummis offers DeFi protections bill as broader market structure draft nears. So many of you know Thursday, the market structure draft will get marked up and, the process will start, right? I had Cody Carbone of the Digital Chamber on just last week, and we talked about it, of course. But Senator Cynthia Lummis continues to make some big moves here in introducing a bill to protect DeFi. We know a lot of the banks are trying to stop stablecoin yield and DeFi. That's two things they don't like right now because they can't fully control it. So as the Senate is poised to reveal the details of the crypto market structure bill, there's a great deal of last-minute maneuvering, including the introduction of a standalone bill that matches one of the provisions meant to be in the primary legislation. Republican Senator Cynthia Lummis and Democrat Ron Wyden, so we got bipartisan support here, said they were introducing a bill to match the long-discussed legal protections that keep non-custodial developers from being treated as money transmitters under the law, though the new bill raises some questions. Meanwhile, the greater market structure bill was expected to have language finalized Monday evening, sources said, and would then start being made public, possibly into Tuesday morning. The Senate Agricultural Committee chose to delay its own markup hearing on parallel legislation to allow more time to work out differences between the parties. So guys, this is how the sausage is made, right? We know it's not going to be perfect. It's not going to be easy, but at least there's progress here, right? Dialogue, discussions, going back and forth, and much more. So I love it. And I love this DeFi protection bill because we know the likes of Citadel and others, they want to stop it, not necessarily kill it. They want to control it. And if DeFi is allowed to be what it's meant to be, the ethos of being fully decentralized, these banks are going to lose a lot. And the same thing goes for, stablecoin yield. They want to pocket all the interest they're earning with their money parked at a Fed versus, giving you some. They only give you 0.01, right? And they don't want to lose that, but we got to fight. Disruptive technology always wins. So let's see how things go here. Now look at this. CFTC to tap Tyler Winklevoss, one of the Winklevoss twins, other crypto CEOs as members of innovation panel. So new chairman Mike Seelig, who's obviously very bullish on crypto, is settling in with the revamping of a new innovation panel with many crypto names. This is awesome. This is what you want to see. The SEC started, their version of it with the roundtables and all these things. And it's great to see the CFTC's kicking this off because you need to have the dialogue. You need to have the discussion. So really, really awesome here. Okay, moving ahead, stablecoin platform VeloFi secures $20 million to scale cross-border settlement rails. So a couple of takeaways here. The innovation continues, new companies building new financial products for stablecoins, crypto assets, and much more. And capital continues to be invested in these companies, right? So VeloFi, a stablecoin-based financial infrastructure company under Galactic Holdings, has raised $20 million in a Series B round to support the expansion of its enterprise payments and settlement services across Latin America, the United States, and Asia. According to Monday's announcement, the round was led by XVC and Ikuyo if I'm saying that right, and brings the company's total funding to more than $40 million. Founded in 2020, Velify provides payments infrastructure that connects local banking systems, global transfer networks, and stablecoin protocols. Its services include fiat on and off ramps, cross-border payments, foreign exchange workflows, and multi-currency treasury operations, which are offered through its platforms and via APIs. So the building continues, folks. This is really great. And, I've often stated, if you have an idea, you're an entrepreneur, now's the time. Put together a pitch deck, go to some of these VCs and hedge funds. You will get capital, guys. Now, speaking of stablecoins, Trump-linked World Liberty brings $3.4 billion stablecoin into crypto lending markets. So, World Liberty Financial, a decentralized finance project linked to the family of U.S. President Donald Trump, has entered the cryptocurrency lending market, highlighting renewed interest in on-chain credit as regulatory clarity improves. The new product, called World Liberty Markets, launched on Monday and allows users to borrow and lend digital assets. According to a Bloomberg report, the platform is built around USD1, the World Liberty Financial's US dollar-backed stablecoin, alongside its governance token, WLFI. Users can post collateral, including Ether, a tokenized version of Bitcoin, and major stablecoins such as USDC and Tether USDT. The platform is designed to support both lending and borrowing activity within a single on-chain marketplace. So this is cool. I don't have a problem with World Liberty Financial, as long as Trump is not entirely connected here. The one thing I did not like is the meme coin. Many of you know that, right? No public official should have that. And here's an example of why Trump set a bad precedent here. Former New York Mayor Eric Adams has launched a New York City token. Here's what he tweeted out about it. Proud to launch Buy NYC token, a new token built to fight the rapid spread of anti-Semitism and anti-Americanism across the country and now in New York City. Oh boy. So it says now live at buynyctoken.com. So you see what has happened here? We can't have this. We can't have this. And I don't look, you may have great intentions. I don't know about how this would stop anti-Semitism and anti-Americanism. Obviously, I'm against anti-Semitism and anti-Americanism, right? But launching a coin to do this, this is strange, man. But let's see what happens. Am I investing in this? Of course not, right? So if you want to, go ahead, but just be careful, right? Like I said, when the Trump coin launched and the Melania coin launched and the Barron coin launched, I said, you don't know who's behind this. You don't know who's operating it and what's happening in the tokenomics. You could see a big time rug pull. And, there could be a lot of insiders who already have the token and they're ready to dump. So just be careful out there, folks. You got to see the tokenomics. That's so important. But this is crazy. Look, I do believe that we're headed to the token economy, and tokens from businesses and brands and so forth do make sense, but it needs to be done well and flushed out and have educate people first about these things. And we got to make sure they're not setting up to rug people. I don't think big brands, like for example, if Amazon launched a token, I don't think they're going to do anything to rug people. And they may provide incentives for people to hold a token, kind of like staking. If you hold on to the token long term, you get X amount of discounts, right? But if you want to sell it, sure. And then you can also spend it with our partners. Maybe Amazon partners with Starbucks or some other, retailer or chain or whatever it is. And you can have utility there, right? And of course, you can use the coin within the Amazon ecosystem. So it's built in with the brand, it has certain guardrails. It allows you to go, do cool things with it. And there's maybe staking rewards and all these things. I think that's something smart, something that's randomly started by a former mayor. We don't have much details. We don't, it's not probably going to be a lot of accountability here. So we got to be careful. Just because someone like this launches it doesn't mean it's good. And look, like I said, he may have good intentions, but it could be someone behind him is like, hey, Eric, do this. But Eric doesn't know all the details of the token, of the tokenomics and who's the holders and who's going to rug who. And you guys get what I'm saying. All right, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Please support the podcast by subscribing to my free email newsletter. It is 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.